What is up everyone? Welcome back to another video. Today we will be talking about China and the recent stock market news that have made major headlines these past few days and how one company may cause a financial crisis. So there have been some sketchy things going on over China recently, right? And I was just, browsing YouTube, looking at videos, and all of a sudden I start seeing this name show up everywhere. Evergrande, Evergrande, Evergrande. So I go and watch some videos and do some research. And man, is this situation bad. It's real bad. So here's what we're looking at, okay? Basically, for the past few days, we have this company called Evergrande, which is basically this massive real estate company in China. They build a bunch of huge properties and buildings, and it's looking like they won't be able to pay off its debt to its lenders. So you're probably thinking, okay, so they can't pay their debt, big deal. Well, just wait until you hear how much debt Evergrande has, okay? This problem is much bigger than it looks. So let's take a look at this article by CNBC really quick. It says, Evergrande is the world's most indebted property developer with total liabilities of around $300 billion. The company has been struggling to pay its suppliers and warned investors it could default on its debts with one key payment due as soon as this week. So Evergrande has to pay back $300 billion. That is more than the GDP of Greece and New Zealand. Not even Jeff Bezos can compete with them. His net worth is about 100 billion off. And for those of you that don't know, in finance, a default is a failure to meet the legal obligations or conditions of a loan. For example, when a home buyer fails to make a mortgage payment, or when a corporation or government fails to pay a bond which has reached maturity. So essentially, they just don't have the money to pay their loans. And for Evergrande, remember, they owe $300 billion. And that is not just money that, they owe money, right? That's money that other businesses need, right? Because other businesses need to essentially pay their bills, pay their expenses, pay their employees, and they're waiting to get their payment. But, Evergrande they just don't have the money to pay them. So let's look here in this same article, and you can see what happened to Evergrande stock in the past few months, right? And you can just see it's going down, down, down. It's looking pretty bad, and for months now. People have been suspecting that Evergrande was in big trouble for a pretty long time by now. Over here in this other article, we can see that Evergrande lacks the liquidity to pay suppliers, contractors, and investors, and is attempting to offer physical assets instead of cash. Thus far, the property crisis in China is playing out quite similar to that of the US around 2007-2008. And if you remember what happened in 2007-2008, you had the global financial crisis, okay? It was caused by people buying houses they couldn't afford and getting loans that they couldn't pay off. And eventually, it created a housing bubble that burst and caused a severe worldwide economic crisis. And now getting back to China, another big problem that they have is ghost towns. Now, I know a lot of you have probably heard of the term ghost towns, which are essentially places where people used to live, but for whatever reason, everybody decided to leave, and now the city or town is basically empty. Basically, think of a place like Chernobyl, where you have a nuclear accident that happened, and people that lived there, obviously they had to evacuate, they had to move out, and now it's basically a ghost town. So in China, ghost towns or ghost cities are places where companies essentially build a bunch of properties and a bunch of buildings, except that no one is moving into them, so no one lives there. It's not that people moved out of the city and left the houses, but that people aren't moving in. So think about this. They make these massive properties, and somebody has to pay for all of that. It costs money to maintain and pay for all those buildings, but there just aren't people renting them. And another big issue that you can't forget about in China is the price to income ratio of the properties that Chinese citizens are buying. So what's price to income ratio, right? It's essentially how much a house costs compared to how much you make. So if you make $50,000 a year and you buy a house for $100,000, the price to income ratio is 2. So the house is 2 times your yearly income. And here in the United States, that number is 4. It's about an average of 4. So meaning that if somebody, let's say, makes $50,000 a year, they would buy a house that's around $200,000. So the price of the house, which is $200,000, is 4 times the annual income, which in this case would be $50,000, right? So that's a ratio of 4. And then obviously that begs the question, right? What is the price to income ratio in China? What is the average? And here in this article, we see that it says that there is a historical custom that men in China should own a home before they are married. Hence, the country boasts an impressive 90% home ownership rate. However, this has caused immense increases to property valuations in China, which carry an estimated average price to income ratio of 27 years of household income, and in major cities it can even be above 46. So think about that for a moment, right? Let's do some quick math. If you have a price to income ratio of 46, so let's say you make $100,000 a year, you would essentially be buying a house that's worth $4.6 million. And it would take 46 years of your annual income to pay off the house. Although, obviously, if you make $100,000 a year, you're not gonna have $100,000 left to just pay for a house. You would have maybe $70,000 or $60,000 after all your other expenses. And to put that into perspective, if you're only making, let's say, $50,000 a year, you get to keep $20,000 or $30,000 of that after bills and taxes, right? And in China, according to the price to income ratio, you would buy a house that's $2.3 million. I mean, imagine that, buying a house that's $2.3 million when you make $50,000 a year. If you're making $50,000, you wouldn't even look for houses over $1 million, let alone $2 million, So obviously, those numbers are they're just crazy. There's a bunch of people in China that are just buying really expensive houses that they can't pay off. And then you have Evergrande, this massive company that employs thousands and thousands of people, owes $300 billion that it doesn't have the money to pay. So along with the housing and property situation going on in China, you can see why so many people are starting to become scared of something like another 2007, 2008 financial crisis happening again, and leaving millions of people financially destroyed, not being able to find a job and not being able to pay their bills and their houses. This situation just sucks. It's terrible to think that there's so many people living in China that might just lose a lot of the things that they own. But, that is not to say that what is going on over there won't spill over into the US and other countries. Because China is a huge export country, right? I mean, if you just look around the room or around your house, I'm sure you'll find something that says made in China. I can basically guarantee you that. You see that everywhere, and so many things are made in China. And the US also exports a bunch of things to China. So basically China is buying a lot of goods from the US. And now, what is going to happen if China has a financial crisis and it can't buy or sell things to the US? So not only will many businesses suffer in China, but also other countries that depend on China to buy and sell their goods. So we'll see what happens. Hopefully everything goes well and China's economy doesn't crash and Evergrande is able to pay off its debt. But what do you guys think? Did you ever even hear about this story, or is this your first time hearing about it? Let me know in the comments, and remember to like and subscribe, and I'll see you next time.